95 on the Nifty. Amit Gupta is now joining us. He's Vice President and Fund Manager PMS at ICICI Securities. Amit, good to have you as always here on CNBC-TV18. Your thoughts, Amit? I mean, will the pullback last? In sharp downtrends, very sharp pullbacks are not unusual at all. Do you think this could turn out to be one of those? And what does one do? Time to buy?
So, see, this is more liquidity driven and event based, what you have seen. So FIIs were selling, so market was not able to sustain at higher level. This is what we have been observing for the last 6-7 months now. But if you look at core fundamentals, how the earnings in the market are shaping up, because that will ultimately decide the bottom whenever the liquidity outflow starts is stopping. So if you see the earnings for financial year 22 and financial year 23, finally they have revised further. So it is not like with the higher commodity prices, you start seeing the downgrade of earnings. Actually, it is not happening. So if you look at March 2022 ending, financial year 22 is revised by 0.7% in terms of EPS for Nifty, and financial year 23 is revised by 0.4%. So this is where I think once the price has corrected, the price to earning is obviously contracting now. So 22.8 in the month of October, we had 1 year forward price to earning. Now it is close to 18. If you look at the last 10-year average, now we are coming below that because that is 19. So this is where I think some cushion is definitely coming. It's a matter of fact that the event has to cool off. And then I think the inflows also will start coming in, and that will stabilize the markets.
Okay, all right. Amit, I'm looking at your portfolio, and one name that did very, very well in the last many years has been Bajaj Finance. It's come off from the recent peak. How would you view the stock? There's increasing competition out there. It has a bit of a digital angle as well. But would you be a buyer at these prices?
So I think the stock has come down because there was, some miss in the NIIs, though it was 25% of jump year on year and 80% of jump in net profit also. But in the rising interest rate scenario, see, the NBFC generally they find little tough because the borrowing cost goes higher, and that is some disadvantage vis-a-vis banks. But this is where the stocks like Bajaj Finance, which have a very high digital footprint, they come into picture and they start increasing the market share. So this is where actually the stock can come into focus. If you see the AUM book, so last year we saw some stagnation in the AUM, but now it has grown by almost 29% to 1.97 lakh crores. So almost moving beyond 2 lakh crores now in the AUM. The customer acquisition has also been fine. I mean, 20% of growth we have seen, and it has gone actually closer to 5.76 crores. And in next financial year, we are expecting almost 90 lakh customers, what the management has guided are going to be added. And we have seen how the consumer discretionary theme, because after the unlocking has started, we have seen many pockets have started performing, and the COVID has not come back to the same level. So I think that advantage possibly can go into the companies like Bajaj Finance. And we have already seen how people have come out, and the building materials, all of these things are coming back because we have seen one of the highest registrations also in home. So I think that particular thinking can be much better for the companies like this. They will come out with the credit cards also from their own balance sheet. And I think this is how the digital transformation is awaited now more from this company. I don't see much of the downside from that perspective. The only thing is that market should stabilize. I think relatively it will always remain at premium. So I think that premium should remain intact.
Okay, Amit, what about State Bank of India? That also is one of your top sort of holdings. Today we've seen quite a bit of buying in the, after the numbers. Your thoughts?
So one of the very, Anuja, if you look at in the PSU banking, was the higher bond yields, higher GSEC yields, because I understand held to market is there, held to maturity is there, where they can keep the bonds, but still MTM loss actually always comes back. But now we need to understand, how much is discounted in the bond yields. And if you see the difference between repo rate and the 10-year GSEC, it generally used to be in a normal market scenario 150 bips of difference. And now you have the repo around 4.4% and the GSEC yield around 7.4%. So 300 bips of difference is there. And I think this is where 150 bips of rate hike this bond yields are already factoring in. And this is what market will also understand, because the numbers have been good from SBI. And I think if you see the credit growth, because this was another thing which was little awaited, last 2 quarters, we have seen very good recovery in the credit growth. So aggregate basis also from 5.5 in the banking system, it has come back to 9.5. And for SBI alone, which has the highest book, actually it has grown by 11%. So I think the corporate lending book has also grown, which is very, very encouraging, because corporate lending book has grown by another 11%. So why it is happening? Because in the higher inflationary scenario, I think the working capital requirement of the corporates also increases. And when we look at the bond yields, generally the corporates, when they go and borrow in the market, they float commercial papers. And when the bond yields have also risen, factoring in 150 bips of rate hike further, which has not happened actually in the banking domain. So they come back to the banks where at least the interest rates are lower and the credit growth of the banks increases to the corporates.
Amit, you have Infosys as a prominent name in your portfolio. But Infosys aside, I mean, it's of course, that's fallen sharply from the highs of what, 1950 to under 1500 now. But the broader universe of IT stocks, there are those stocks which were trading at 80, 90 times, which are now trading at 60 times year ahead earnings. But there are also cheaper names, right? I mean, something like a Cyient comes to mind, right? There is Zensar, which comes to mind. There are others as well. Would you look at that part of the market, IT services, where, I mean, the road ahead in terms of growth is still pretty robust if you look through the current turbulence? Your sense?
No, point taken. Actually, see, there are two things that we need to note here. One is when you talk about Cyient or L&T Technology Services or KPIT or Tata Elxsi. So all of them are into the ER&D, which is engineering, research and development. And if you see the IT spending in this particular domain is hardly 6-7% worldwide. And if you see the normal IT spending, it is almost 66%. So there is a huge difference. And this is where there is a big market to capture for these companies going forward. So definitely, because the valuations were steep, we were not looking at that. We were more into the large caps. But once the stocks, comes down, I think it will be definitely attractive. Second, because the rupee has started depreciating a bit. We have already seen dollar moving beyond 103, now near 104. So I think rupee, if it starts little bit depreciating, that is also some positive, at least to the exporting companies like, IT space. And large caps, because ultimately the mid caps selling stops when the large caps comes down to good levels. So this is where Infosys, if you see from 28 times, now it is coming back to 22 times. So I think definitely from the valuation angle, these stocks are coming better. And it's not like the margins have got hit drastically. I mean, from 20 to 24% in Infosys, the margins are coming down to 21-23%. So I think you need to take it. And attrition is not something very negative for ITs. It is just a matter of fact, the industry is growing better. That is where the people are finding much higher packages and they are moving around. So that is something over the period will settle down. So I think revenue growth, it always starts, conservatively, Infosys. And as with the passage of time, it starts increasing the revenue guidance that we have to see. And that is where the mid caps also slowly will start gathering pace.
Okay, all right, Amit, in the few minutes, we'll be getting the preview in terms of expectations on Bharti Airtel. That's part of your portfolio as well. Stock has corrected, close to around 14-15% from the recent peak. The longer term horizon, of Bharti Airtel continues to look good. Will that be the pick of the telecom space?
So I think only, 2 players or 2.5 players are there. So if you see the capex for 5G, because 5G is going to be there now, May, June, I think auctions will be there. And then in the month on August 15th, I think some announcement may come. And but the government has slashed the prices. I think 35-36% the government in key frequencies, they have already slashed the prices. So I think that is good, though the industry was demanding a little more higher actually. But eventually the ARPUs are coming better. I think that is definitely an increasing point, because 160 beyond both are there now, Airtel or Jio. And I think if you see the tariff hike in the prepaid segment of 22%, so you can see further going ahead now. And that is where actually 80% of the revenues are decided by in the telecom space. So I think these things are good. Revenue market share has increased. I think for Jio it is 40%, for Bharti now it is close to 36%. So which is also good. And Idea subscribers are little losing actually, and they are moving into these companies. I think 2 to 2.5% of subscriber base increase. Definitely we can see going ahead now.
Okay, now two stocks in your portfolio, Amit, which rarely have lost money for stock markets, if ever. Asian Paints and Pidilite, right? Both cash generating machines, always expensive. But with the way crude prices are moving up, do you think there could be some bit of trouble for both these names?
So Anuj, they have been listed actually for quite a long time now, and if you see the trend, it's not like crude prices have moved up in this particular cycle. I mean, last time also in 2008 we saw they moved up to almost $140 per barrel. So if you see the move in both of these companies, obviously they are market leaders. They have the power to pass on the cost, and even then, they can increase the market share. Like what Asian Paints has done, actually 22% of increase they have done in the prices. Pidilite actually it has acquired Araldite, and the market share is increased actually in that segment also. But 2008 also we saw a lackluster performance in the range bound market, and eventually the stocks started performing again. So this is where I think these stocks are there, so they can go into some time correction. If crude prices go substantially higher, it can be a little actually elongate the period, but eventually I think we have seen these stocks coming back. So it's a matter of time, I think. And once Iran and Venezuela sanctions, possibly, because that will be blessing in disguise.
Okay,
if
Amit.
that is lifted.
Got it. Point taken, Amit. Thanks a lot for joining.